The government just announced the health insurance price increases for 2025. This happens every year, and this year the average price increase is 3.73%. Is that good? Well, it's slightly more than inflation, which this year was 2.5% in January, but it is lower than the 6 or 7% that some people were expecting. So you tell me. Of course, that's just the average increase, and some funds are going a lot harder than others. The worst offender this year, well, was police health, with 9.56%, a pretty big increase. The lowest increase this year was 1.91% from the not-for-profit fund HIF. But what about your fund? Well, let's have a look at some of the big funds to see how they're stacking up. And HBF is doing the best at 2.8%, which is below the average. Well done, HBF. It's quite a big jump up to the next major fund. Medibank and AHM are putting prices up 3.99%. Another big jump up to HCF, who had a really good rate rise last year, but this year they're all the way up to 4.95%. Bupa are a little bit higher at 5.1%, and the highest of the major funds in terms of the average increase across all policies is NIB at 5.79%. So what can you do? Well, the deadline is fast approaching, so you need to do something. Firstly, go to finder.com.au, see the full list, see how your fund stacks up, and see if there are better options out there. While you're there, compare policies that are right for you. Make sure that your current policy is covering everything you need, nothing you don't, and that there aren't other policies out there that cover the same for less. There probably are. And finally, if you have the cash, you can pay in advance. You can pay 12 or 18 months of your policy up front. You can lock in today's rates for another year. Whatever you do, the deadline is April 1st. That's when prices are going to go up. So try to do something between now and then if you can.